Now, do you know anyone in aged care or someone who may need to go into aged care? Here's how you can get them an almost 8% return on their money. Now, for most people in residential aged care, they're required to pay what's called an accommodation cost, and there's 3 ways in which we can pay that. You're given the option to pay via a lump sum, or a calculated interest-only payment, or a combination of the two. Now, let's chuck an example out there. Let's say the aged care facilities ask for an accommodation payment worth $400,000. Now, we can either, if we've got that money in cash, we can pay that amount in full, and that's our accommodation cost sorted. If we don't have the full amount, or we don't want to pay any amount up front, they're going to charge us an ongoing interest payment, and that interest payment is just below 8% at the moment. So over a $400,000 deposit that they're asked for, they're going to ask us to pay approximately $32,000 per year in interest each year. Now, if you pay a partial contribution, the remaining amount is going to get charged at that interest rate just below 8%. As an example, they've asked for $400, we've paid $200, we've left $200,000 outstanding, so $200,000 at that 8% charge, it's almost $16,000 per year. Now, how do we get that 8% return, you ask? Well, essentially, if we've got the funds sitting in cash and term deposit rates now, we're lucky to get 4% these days, we could potentially save ourselves approximately 8% in ongoing aged care fees by getting our money from cash and paying it as a deposit for aged care. Because if we don't pay the deposit, they're definitely going to charge us. So it's essentially net 8% return on your money being held over here. Now, there's a few rules around the aged care deposit that I'd like to make you aware of. The first being that once you've paid that deposit, the aged care facility will get that, they'll invest it, they'll keep any interest or earnings based on that. Now, they're going to invest it quite conservatively, but don't be afraid. If they make a bad financial decision or the facility goes bankrupt, as an example, the government will step in and refund your deposit. The other one is that your deposit that you pay currently, everything gets paid back at the end of the day. It can either get paid back to the resident's estate, or if the resident were to change facilities, it gets paid back to them directly. So if you've got the means to do so, I'd really suggest considering paying a deposit towards your accommodation costs for aged care, but just make sure you've kept enough in your own bank account just to help support some of those ongoing costs and access to capital as required. Thanks for watching the video. If you've got any questions, chuck them in the comments, I'll get to them, or make some video responses. That's always fun. Thanks for watching. Hopefully that was helpful.